Hey everyone, welcome back to Corporate Dakota, the place where we unpack the financial secrets that move the markets, and boy do we have a treat for you today. Because we are diving into Enerpac Tool Group Corp latest filing which dropped on the 17th of December 2025. Get ready, because this report might just be whispering some interesting news about their recent financial performance. Before we jump in, if you are someone who loves getting these kinds of financial insights without all the corporate jargon, make sure you hit that subscribe button and join our growing community. Also, we've got a fantastic Discord server linked in the description below where we break down these filings even further, all of which is free to join. Alright, so what we have here is a current report on Form 8K filed by Enerpac Tool Group Corp. Now, this is not your typical quarterly or annual report, but a filing that companies make when something significant happens that the public should know about. Think of it as a special bulletin from the company. The big date here is the 17th of December 2025. This is the date the company is telling us about their most recent financial results. Specifically, they are reporting on the 3 months that ended on the 30th of November 2025. So we are looking at their performance wrapping up in late fall. The company is Enerpac Tool Group Corp, and for those who might not be familiar, they are incorporated in Wisconsin and their stock trades on the New York Stock Exchange. Under the ticker symbol EPAC, this filing is all about giving us a snapshot of how they are doing financially around this period. Now, the core of this report for us is under item 2.02, which deals with the results of operations and financial condition. This is where the company has released some information, and they are telling us it is intended to be a furnishing of information, which basically means they have put it out there for us to see, but it is not being filed in a way that makes them liable for what is said in it that is a bit of legal wrangling for you. What they have done is issue a press release on the 17th of December 2025 to announce their financial results for that recent quarter. And this press release is tucked away as Exhibit 99.1 for us to examine. This is our main source of truth for the financial details today. So let's break down what is in that press release, because that is where the story is. We are going to look at the key numbers and try to understand what they mean for Enerpac Tool Group Corp. Now, looking at the numbers from the press release, we can see how Enerpac Tool Group Corp performed in the 3 months leading up to the 30th of November 2025. It is crucial to see how they are growing or facing challenges. The company's main financial engine is its class, a common stock trading under EPAC on the New York Stock Exchange. When we look at this report, we want to see if the business supporting this stock is healthy and growing. While the filing doesn't show the tables directly, we know that this report is about their financial results. We are looking for what the most recent quarter's performance tells us about the company's health. Are sales up or down? Are profits growing? How are they managing their costs? Let's imagine what those numbers might look like. If, for instance, their revenue saw a modest increase, that would suggest continued demand for their tools. But if costs also rose significantly, it could eat into their profits. A big drop in sales by say 10% could mean they are losing 1 in every 10 customers or facing strong competition that is impacting their market share. Conversely, an increase in earnings per share suggests that the profit attributable to each share of stock is going up, which is generally a very positive sign for investors. We also need to consider if the company is investing in its future. Are they spending more on research and development to create new products, or are they cutting back, which might signal a lack of innovation? Ahead debt levels are also a big indicator of financial stability. If their debt is rising faster than their earnings, it could be a red flag indicating they might struggle to meet their obligations down the line. Now, looking at Enerpac Tool Group Corp, more broadly and considering their business operations as a provider of industrial tools and services, we can try to infer the story here. The industrial tools sector can be quite cyclical, meaning it is closely tied to global economic health. When businesses are expanding and investing more in infrastructure and manufacturing, demand for Enerpac's products would likely be strong. If there is an economic slowdown, companies tend to postpone big purchases, which would naturally impact sales. One key thing to watch is how they are managing their supply chain and production costs. In recent times, many companies have faced challenges with rising material costs and shipping delays. How Enerpac has navigated these issues would be a major factor in their profitability. Let's say their reported earnings per share for the quarter was $0.3. If last year it was $0.25, then that is a 20% increase, a good sign. But if their net income is up only slightly while their expenses have jumped significantly, that might mean their operational efficiency isn't improving as much as we'd like. We also have to look at the context of their competitors. Are other companies in the industrial tools space performing similarly, or are they outperforming Enerpac? This competitive landscape can tell us a lot about whether Enerpac is gaining or losing ground. In terms of risks for a company like Enerpac Tool Group Corp, several things come to mind. Economic downturns are a big one. Geopolitical instability can disrupt global supply chains and affect demand. They also face risks related to competition, innovation, and changes in technology within the industrial sector. If they are not keeping up with the latest advancements, their products could become obsolete. On the flip side, opportunities are also present. Growth in emerging markets could provide new avenues for expansion. The increasing demand for automation and advanced manufacturing techniques could also create new niches for their products. Strategic acquisitions or partnerships could also be a way for them to grow their market share and expand their offerings. So what is the overall story here based on this Form 8K filing? It seems that Enerpac Tool Group Corp has released its latest financial performance data. We are focusing on the results for the quarter ending the 30th of November 25. While the exact numbers aren't presented in a table within this HTML, we know they've issued a press release detailing these results. The importance lies in understanding if their operations are healthy, growing, and if they are positioned well for the future. Now, for my take on Enerpac Tool Group Corp, based on what this filing implies. Companies in the industrial sector generally thrive when the global economy is strong and businesses are investing. If Enerpac is reporting solid results, it indicates they are either benefiting from this economic tailwind or have a very resilient business model. A key strength for Enerpac would be the continued demand for their specialized tools and services. Their ability to innovate and adapt to new manufacturing technologies is also a significant factor. If they are showing growth in their profit margins, it suggests they are managing their costs effectively, which is a big win in today's environment. However, a notable risk is their sensitivity to economic cycles. A widespread recession could quickly impact their top line. Additionally, staying ahead of technological advancements is a constant challenge in the industrial space, and failure to do so could lead to them losing market share to more innovative competitors. So my conclusion is that Enerpac Tool Group Corp appears to be navigating its market with its latest report showing its financial status. The report serves as a critical update for investors and stakeholders. We need to keep an eye on how they manage economic headwinds and continue to innovate to secure their long-term success. Alright, that is our breakdown of Enerpac Tool Group Corp latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.